Hi everyone and welcome to Behind the Numbers. My name is Dave Bookbinder. I'm a managing director at B. Riley Financial, and I'm also the author of the new ROI, Return on Individuals. And this is the program where we dig deeper to understand what really matters most in business. Today we're going to be talking about a topic that is germane to every business, and that's risk mitigation. And I'm pleased to welcome Van Carlson, who's the founder and CEO of SRA831bAdmin. Van, welcome to Behind the Numbers.
Thank you, Dave. I look forward to our conversation and getting the word out on what we do as a company.
Sounds good. Why don't we start with you telling us a little bit about who you are?
Yeah, so I'm in the exciting world of risk management. Been doing that for almost 30 years and been helping business owners now around the country manage risk. Unfortunately, risk became pretty evident to a lot of people last year with COVID-19. But prior to that, I really got into, I was running a pretty successful property and casualty agency up until 2008 when I saw a lot of business owners unfortunately go out of business due to the Great Recession. And there had to be a better way to manage risk, the financial risk business owners take every day. And I was witness to people that took some strategies and really developed them over the years leading up to 08. And I became a real believer in the 831b tax code. And so that's where I sold my agency, went into this full time, and now we've been helping clients mitigate risk with the very little known tax code out there that a lot of business owners unfortunately don't know about. And that's really where I really elevated my professionalism in risk management with business owners, was taking this very little known tax code that Fortune 500 companies were utilizing and trying to bring it down to the point where small middle market business owners, mom and pops, entrepreneurs, startups, and those types of businesses could take advantage of it, no different than any the people they're competing with. And that's where we're at. And it's exciting. It's interesting. I got a great team of people, and now we're up to almost 200 representatives around the country representing our products. So, I tell people it's been a 13-year overnight success story, but it's taken a lot of hard work, and we continue really getting the word out, helping business owners take advantage of all the tools available to them.
Well, anytime we can get a secret tool that the big guys are using and share it with middle market and the smaller entities, it's always a good thing. So why don't we start by you explaining what an 831 thing is? You mentioned it's in the name of your firm, 831b.
Well, the best way when we dive into it, we really want to compare. There's only two tax codes that allow business owners to defer income for business, right, and still take a deduction with it. And one, as everybody knows, is the 401k. So when we talk about 401k and 831b, that's just where they're at in the statute of the tax code, right? So 401k, everybody understands, that's designed for retirement of the owners and employees. And the business is deducting that contribution, and then it's going into the retired accounts under the 401k. Now, there's rules and regulations. There's plenty of courts cases that kind of dictate how you're supposed to run one of these things. And there's a lot of administrators out there as well, right? So we're an 831b admin as well. So we kind of mirror that with the 401k administrators. So an 831b though allows you to deduct premium, no different than a work comp or anything else, goes into an 831b if you're self-insuring risk. If you can't transfer risk through traditional means, right? Like, if I can buy fire insurance for my building, I'm going to buy through Travelers. But if I'm going to be, a good example would be last year. If I'm going to own a commercial building that has a dentist practice in it, and they're forced to shut down due to the municipality closing down of COVID-19 issues, that's called an indirect loss, where I don't have a direct loss. I don't have a fire on the building, so I can't call it up business interruption coverage. But if the building just shuts down because of there's a lot of reasons why buildings shut down, unfortunately, that are caused due to indirect losses. And most policies, if not all policies out there, are excluding indirect losses. And so that's where we come in and kind of, help with the business owners understand the risks that they're self-insuring for, and then explain why this tax code exists. You go back the tax code came in existence in 1986, Tax Reform Act, which I would tell you, in our lifetime, currently, it's the biggest reform act since we've been alive, 1986. They made a lot of changes, but what was also happening when they called it the critical liability crisis, where people were being non-renewed if they had one simple claim. A lot of insurance companies were struggling to try to make a profit. It was, you're coming out of the 70s, going into the 80s. Times are tough. You had hyperinflation. I mean, there's a variety of things that were going on. And, one of the things about the IRS, one of the things about our tax code is if I'm self-insuring risk, that's not a deduction. Now, if I'm buying a policy to transfer that risk, I can deduct it. Well, Congress said, hey, let's get together on this. And, back then we had maybe some meeting of the minds, compromising. Tip O'Neill, Ronald Reagan. I mean, look, Ronald Reagan was a Republican. The Tip O'Neill was a Democrat. It was a Democrat-run Congress. And they got together and compromised and got this code to the table. And it really is a code that created an incentive for you to own some kind of an 831B plan to recognize self-insuring risk. Now, there's rules and regulations just like the 401k. And that's really where we as the admin, that's why we have a job, that's why we work with our clients or we consult with them on how to properly own an 831B plan. No different than the 401k administrators. And that's really where, unfortunately, the code has been on the books almost 40 years. And believe me, the big boys have been using it for a long, long time. Really successful businesses in most communities own some kind of form of an 831B because there's just a lot of risks they can't transfer to. They can't, intellectual property is one of them, or let's say you have a hazard type material that you're manufacturing. It's a very limited product liability. I mean, I can go on and on about a lot of the self-insuring risks that are out there to business owners, but even traditional insurances, they find themselves in self-insuring a lot of those risks as well. And so that's why the code exists. And, unfortunately, leading up to last year, we had a lot of clients in our program that, weathered the storm better than their competitors did, because they were able to take a little bit off the top every year and park it off to the side into an 831B. And when the time came, they had those funds available to use that they weren't dependent on a line of credit at a bank for. They didn't have to go down to cash in their 401k to pull out money to keep their business and pay their rent and everything else, right? These were tools that were available to them. It's just, unfortunately, a lot of them didn't know about it. And so that's why we appreciate being on shows like yours, because we got to get the word out. We don't know. I hope we don't ever experience another COVID-19. I hope we're not forced to shut down the entire economy for, I don't know how long it was. Some would argue it still is, but, I don't know when the next time is. Nobody does. Nobody has the crystal ball. But, this, again, is a toolbox that most business owners aren't aware of. And it's our job to make sure they are, and they can make a decision to go forward or not. But I think they owe it to themselves, their employees, their family, and the business they build. If there's a better way to mitigate the risk, then I owe it to myself to do it, to at least look into it.
Yeah, clearly you're passionate about what you do. Van, tell people who are watching and listening how they can contact you if they want to learn more about this.
It's 831b.com is our website. That's the best place to start, 831b.com. They can go on, look at the videos, understand. They can certainly reach out to us through our team there. And like I said, we have a lot of advisors throughout the country, and we'd love to hook them up with somebody locally if we have somebody. We go and educate them and have them understand, the rules and regulations. I mean, unfortunately, this code has been abused, but so has the 401k been abused when it first started. As awareness becomes more and more, hopefully we start cleaning up some of the stuff. But the tax code was hijacked for about 14 years, really for estate tax purposes. And again, it's getting to that upper echelon of people that have estate tax problems. They took this tool and they manipulated it into something else that it wasn't never designed to by Congress. And I'm actually getting ready to write another article. I wrote an article recently for Forbes magazine talking about the 5 abuses of 831Bs. And we're actually getting ready to submit another one talking about the crisis of the 80s and why the 831B came into existence. Looking at that decade and looking at the situations we're in, we're kind of leading that into that again, unfortunately, was based on some of the things that are happening with the insurance industry and with the hardening of markets, having a harder, rougher time making a return on their money. We're starting to see a lot of hardening and things changing in the traditional insurances as well. And so, again, I get geeked out on that stuff. I don't expect most business owners to get too excited about their insurance program, but it's important, extremely important.
No question. And that's a good stopping point for us to take a quick commercial break. So Van, you sit tight, you watching and listening. We'll be right back on Behind the Numbers after this quick break.
So, I'm kind of new here, but I've noticed a trend. My human does this funny thing where she goes around and gets all my toys, and then she hides them in that basket by the door. But it's always the same basket, and it's always in the same place. And then she acts so surprised when I find them, but, she's putting them in the same basket. Again. It's like, hello, that's where you put it last time. You were the worst at hide and go seek.
Welcome back to Behind the Numbers. I'm Dave Bookbinder, and today we're talking about risk mitigation with Van Carlson, founder and CEO of SRA831bAdmin. So Van, at the end of the first segment, you had alluded to a Forbes article that you had written, and it's the 5 things to look out for in this world of 831B. Probably a great idea if you wouldn't mind. Why don't you share what those tips are?
Sure. So when I talk about an 831B plan, it has to go into a box, and the box has to look like an insurance company. And now if you're so I don't want to get too complicated with your listeners, your viewers. It's just that the box has to look like an insurance company. We as the admin, again, make sure that the box is an insurance company. So you have to act like one, right? So you can't insure for implausible risk that you're not subject to. Again, there's a lot of tax incentives. I should have, the biggest tax incentive, right, is in the 831B, just like the 401k. The contributions that go into an 831B are not taxable. So, in this event, and when the code got passed, it was $1.2 million. Now with the PATH Act changes in 2017, Congress actually upped that to 2.3 with an inflation rider. So now it's 2.3 and some change. 2.3 million per year you can put into these plans. Well, when you talk about millions, again, there's rules and regulations to these things. There's tax advantages to them. And so that's really where the abuses come in, is when the implausible acts, they're not acting the principles of insurance, there's not adequate reserves or solvencies of the insurance company. There's a list of things that go into those things. But I just want to make sure, the 4-part test our clients are required that we as their admin make sure they have is the transfer of risk distribution, fortuitous risk, which is basically insurance can't be a business risk, right? It has to be an insurable risk, meaning it's an unforeseen and unplanned event. COVID-19 again is a good example of that, right? So business risk, you can't be insuring for types of business risk. And then the last one, you have to act in principles of insurance. Those are our 4-part tests. And that's really what it kind of dives into that article a little bit, talking about looking out, not having those tests adhered to. We'll get the taxpayer in trouble. We'll get a business owner in trouble. Absolutely. Unfortunately, there has been some abuses and games have been played. And hopefully the IRS cleans some of those folks up to the point where, this will become a normal business practice. I'm convinced of that. I see it all the time. I read the periodicals I read, most people don't read, when it comes to risk management. But I can just see some of the things that are taken up in traditional insurances, and with the complexities of life, of commerce. I mean, look at the supply chain risk right now. It's being stretched. Who's out there offering supply chain risk insurance policies today? Nobody is, and nobody will, because it's too catastrophic an event potentially, right? And insurance companies don't like catastrophic losses. So again, that's really what the basis of the 4-part test, and that's where we, as your admin of your plan, adhere to and make sure our clients do. And there are some calculated risk in this thing. When I talk about the second test, it's called risk distribution. You're going to have to get to the law of large numbers. That's one of the basic principles of insurance. Well, some of these things you're going to have to share in risk with other people. But that's how all of these insurance companies started over the years. When you look at Farmers Insurance, it took 2 farmers getting together in Southern California because they couldn't buy commercial liability insurance for their vehicles on the road for farming. And so they formed a co-op. And so a lot of these businesses our insurance companies we look at have been around for over 100 years ago. They all started like a form of a co-op. And so we're taking some of these risks that you can't buy traditionally, you can't transfer, and we're putting them in these 831B plans so businesses can mitigate risk more effectively and more efficiently on their own. And then we're looking at traditional insurances as well to put them in these plans as well, especially if you're paying exorbitant amount of premiums and you got good loss ratios, you've done everything right, safety, all that stuff. There's advantages there as well for business owners to look at taking their entire insurance program in-house. And there's, again, a ton of advantages there. And this is one of these tools where it's not working in your business, it's working on your business. So when I sit down with business owners, I want to make sure we're in the right frame of mind here. We're not trying to build a spaceship. We don't want it to sound like a spaceship sometimes, but it is insurance and there's a learning curve to it. But at the same time, we're not here to complicate their lives either. As their admin, we're very easy to work with and consult with them constantly and answer any questions or concerns they may have. But moving forward into this new realm of post-COVID, it's caused a lot of business owners to be concerned about self-insuring risk, and we're here to answer and consult with those clients as needed.
Yeah, it sounds complicated, Van. Is it difficult to set one of these things up?
It's not. Now, it is a C Corp, so, we have to find domiciles that we prefer, and we set up a C Corp. That's some of the tax advantages to the program. Is, you're taking income out of an operating company. If it's an S Corp or LLC, you would have done a pass-through. Now you're expensing it. Now you're dumping it into a C Corp. And then down the road, you might get a dividend or capital gains, and it might be less than what you would have paid in income. That's the big difference between a 401k and 831B, right? 401k, you're still going to pay income taxes on it down the road. You're just deferring it. Where with an 831B, you can defer it, and maybe you win, maybe you don't. We don't know. Capital gains and dividends taxes get kicked around based on the administration and what's going on at the federal level all the time. So, we hope our clients win on that, but bottom line for us, it's about deferring taxes, mitigating risk, and having a war chest, a rainy day fund, whatever you want to call it, to fight the fight in the event you need to. And again, I hate to keep coming back to it, but I think last year was a glaring issue, a glaring moment for a lot of business owners. And again, leading up to that, just taking a little bit off the top and parking it off to the side is great risk mitigation, but it's just good business.
Yeah, so saving for that rainy day and having the tax advantaged aspect and incorporating that sounds like a winning combination. Van, for folks who are just tuning in, how can they reach out to you if they want to connect with you?
The best way is really go to our website. 831b.com is our website. You'll find a lot of information on there. There's videos. We're happy to provide a lot of materials, case studies, all sorts of stuff to you. You just have to reach out to us via the email. And you can find my team on there as well. And like I was saying earlier too, we have representatives all over the country. And if we can certainly put you together with somebody locally, we'd love to do that. And so really it's, like business owners owe it to themselves. I mean, if you survived last year, you survived '08, you survived, there's always going to be another event, unfortunately. If you can mitigate that and make yourself sleep easier at night, that is, one of the best compliments we get from our clients is that Dan, I'm just glad I've done your program because I just sleep a little bit easier at night knowing that I've done this. I've planned this. I set this up. And that's the greatest compliment any professional, especially in risk management, can get from a business owner.
Yeah, I mean, one of the big risks that we're seeing now as a big news item is the supply chain disruption. So that's another unforeseen risk that you guys may be able to protect against, right?
We do. We had some pretty big supply chain risk claims come in last year. It's funny. It's not funny, actually. It's just contracts, right? You sign up for a contract, you contribute, you commit to a timeline. And just because there's disruption on your supply chain doesn't mean that timeline still can't be met. We had a client last year. He had to divert materials to some pretty big businesses that required certain things coming into school clothes, and he had to put it on air freight to get it here in time. It was an increase of almost $400,000 of expenses. Now he already signed the contract. He already got paid for the materials. He ate the $400,000. The nice thing with our program is he was able to offset that off with our program through an 831B, which didn't go into his cash flow, kept his business afloat, and this wasn't so detrimental to his business. It would have been, but with the 831B, he was able to get through it much easier than, because when you're getting contracted like that, the banks aren't going to come to you help you either, right? So we call it the double negative. When something's negative things going on, you have a contraction of cash flow coming in, but you have an expense ratio going up. Where's that money going to come from? And again, that's why Congress passed the code back in the 80s. Same situation was happening.
Gotcha. So, Van, we only have a few minutes to go in the program, but I want you to share some tips, some advice that if you were meeting somebody and you were doing an elevator ride with them and you were going up to maybe the 23rd floor, what might you tell somebody on best way to mitigate risk, and how might you tell them about the 831B program?
Yeah, the elevator pitch is always a tough one because as soon as I tell people I'm in the insurance world, they're like, okay.
You've got about 3 minutes. But, I'll give you about 3 minutes. We'll pretend there's a stop along the way.
From our perspective, what keeps you up at night? What are the things that, if you've been in business long enough, you've experienced something that's been negative that you thought was covered that wasn't covered. When I was back in the insurance world, selling traditional insurances, I'd had clients call me all the time, and I felt like I was the guy that was denying claims all the time because I was like, no, that's not covered, that's not covered, that's not covered. I mean, so again, the business owners typically drive the bus for us and in our conversations because they'll tell you what they've experienced. I can tell you, when I first got into this, supply chain risk was an all-time high risk for a lot of businesses, and unfortunately, until they experienced it, they never thought about it. I think last year is another good example. I think a lot of business owners, for the first time, they had an all-risk policy, or their insurance agent said you're covered for all risk. They found out real quickly they weren't. And so that's really where we start with our conversations with business owners, like what can we do what keeps you up at night? And a lot of the times it's healthcare, all these other things that go on in the world. But, even in the healthcare arena, there's an answer for that under this tax code. So again, business owners, and I can't say it enough, Dave, I really appreciate the opportunity to talk to you today because, we want to get the word out. We want to get education out. And again, there's been abuses on the code, but at the same time, the code's not going anywhere. Congress is a big believer in the program, and I think COVID-19 resonates that, unfortunately, more than ever.
Yeah. Van, in about 60 seconds, you mentioned healthcare as one of the main items that keep your clients up at night. What are some of the other items that you might throw out there that the audience can listen to and understand and think about?
I think the other one is employer liability practices. I think dispute resolutions. When we have 80% of the barred attorneys living in one country in the world, it's going to be litigious, and that's where we're at today. I foresee an issue coming in the horizon where courts are going to be jammed up with a lot of issues surrounding COVID-19, a lot of lawsuits coming. And it will be interesting to see. But, unfortunately, there's not a lot of companies out there that are going to find out they don't have they call it a right to defend under the liability statutes, and they're going to find out they're not going to have coverage. And, legal costs are expensive. Again, if you're doing well, put something off to the side, just good risk mitigation, because we don't know what's going to come at us. When you look at supply chain, we talked about, being forced to be shut down. You got political risk now. You've got cyber's off the charts risk, right? I mean, look at the amount of data we're collecting right now on all our clients that we're ultimately responsible for. So there's just a ton of things out there, unfortunately, that business owners, you never know how good your insurance is until you have to go use it. And unfortunately, if you've been in business long enough, you will have been disappointed by it. And that's unfortunate. But this is a tool you can look at. And whether you decide to go forward or not, I think you owe it to yourself to certainly investigate.
Yep, great advice. Van, thank you so much for joining us today on Behind the Numbers. It was great having you here.
Thank you. I appreciate the opportunity.
Sure thing. And thank you at home for watching and listening to Behind the Numbers. We can't do this without you. Please be sure to hit the subscribe button so that you can stay in touch with us and all that we're up to. And we look forward to seeing you again next time. If you'd like to have a conversation with me, you can find me on LinkedIn, Facebook, Twitter, and at brileyfin.com. My name is Dave Bookbinder, and I'll see you next time on Behind the Numbers. Take care, everybody.